Welcome to PhillipCapital Weekly Market Watch. I am Yin, Business Development Dealer at Phillip Futures. For this episode of Market Watch, I'll be discussing on the gold's performance in 2015, the impact of war's conflict on this precious metal's price, together with the technical analysis. So, what's so special about gold? Gold is the natural safe haven that investors will look into whenever there's any geopolitical conflicts. The negative correlation with the US dollar also increases the demand for the gold appeal. Investors readily secure gold when the value of the dollar falls against other currencies. This also rush to purchase gold and leads to a rise in the gold demand. So what generally happened in 2015? The precious metal experienced an uptrend in the early 2015 due to the conflicts in Greece and Ukraine. The steady climb was further supported in early January by the increased uncertainty in the Eurozone, with the possibility of the Europe Central Bank announcing a QE program. In mid-January, the QE program exercise was made official, with the European Central Bank announcing that it's gonna print money to buy up 60 billion euros worth of sovereign bonds a month in the Eurozone. Such a policy kept gold demand well supported as an accommodative monetary environment normally boosts up the appeal for gold as a hedge for the inflationary purposes. Gold is a highly sought after commodity in times of financial uncertainty and geopolitical conflicts. For example, in January of this year, when the Swiss National Bank removed the ceiling of the francs versus the single currency, it caused the francs to surge almost 40% against euro. The removal of the floor limit between the euro and the Swiss franc has created further uncertainty in the economy, which boosted the demand for the gold price. With the news that the European Central Bank suspending the eligibility of sovereign debt as collateral for its liquidity operations, which began in middle of February 2015, has caused the investors to purchase the precious metal. However, with the more recent news that the Eurozone and Greek government has come to an agreement of extending the bailout program for 4 more months, the gold safe haven appeal has been reduced and causing the gold price to fall to the longest weekly lows. So what is the focus for gold for the next half of the 2015? Geopolitical conflicts can actually affect the precious metals demand and supply. As gold is seen as a safe haven commodity, investors will tend to buy more gold during the conflicts. The long-term outlook for gold in 2015 is down, following Greece and Eurozone's agreement on extending the restructuring program for Greece, with investors speculating that the Federal Reserve most likely increase the interest rate this year. It is strengthening the dollar, which is also negative for gold as these two have negative correlation. Moving on to the technical analysis for gold. As you can see, this is the 5-year gold spot daily chart. From the chart, we can see that the gold has been on a declining trend since early 2015. This downtrend is expected to continue for the near term as Greece and the Eurozone has reached to an agreement for keeping the bailout continue. This caused the precious metal to hold a 4-week drop, curbing a drop in the demand for the safe haven metal. For the time being, gold is supposed to be supported at 1,180 and the immediate resistance is at 1,230. So, in conclusion, the precious metal will be bearish for the first half of the 2015. This is so as the fundamentals of gold going bullish are present, but not so strong enough to raise the gold demand, as the investor feared that the Federal Reserve will most likely raise the interest rate around June 2015. News that the Greek government and the Eurozone has come to an agreement to extend a period of bailout funds has further caused the price of the precious metal to fall. This will strengthen the dollar and will be a negative for gold as these two have a negative correlation. So with this, we have come to the end of this week's edition of Market Watch, where we have discussed gold and impact of war conflict on this precious metal. So for more information on the risk and return of investing in gold, you may approach any representative from Phillip Futures for a further discussion. With that, I have come to an end of these presentations. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Please stay tuned for more Market Watch videos. Thank you.